friends, welcome to Nirmal. I am Piyush Jain, and today we are bringing to you a company which is bringing out its IPO. And this company is actually being nurtured by first generation entrepreneurs. It's a homegrown brand, a very interesting brand. Let me now welcome the management and also announce the company, Sai Silks Kalamandir Limited. That's the name of the company. And joining us is the management, Mr. Prasad Chalavadi, the founder and the managing director of the company, Mr. Bharadwaj Rachamadugu, Senior Vice President of the company. Gentlemen, welcome to the show.
Thank you.
Hello, sir.
Thank
Hi.
you.
Happy to be here.
Uh, Mr. Prasad, let's first start with you and let's try and understand how has been the journey of the company from again almost zero as you just formed and sort of nurtured the entire brand now to possibly becoming the listed company, and also help us understand what's the business model, what's the sort of secret sauce behind the success.
Sir, to start with, I'm a first generation entrepreneur. I have came to this business by choice, not by chance, meaning I have done an extensive homework to identify this particular category of the business. Before coming into this business, I was working as a software engineer living in America. Though I was living there, working there, my heart was always back in India. I always wanted to come back to start some retail and make an enterprise out of it. The main reason for that was I hail from a business family. Because of that, from the age of 10, I was associated and trained in my family business, which was into spices retail from generations. Once I understood, I could not scale my aspirations in that particular category, I chose to go for higher education and moved to America and started chasing the dollar dreams. So, though I was living there successfully, happily, as I told you, I was just waiting for an opportunity to come back to India, which I realized in early 2000 there would be a retail explosion. That's where I started my extensive homework and research to understand which vertical of retail to bet on. Because there are 100 different verticals, which is already I don't want to get into something which is already dominated by large corporates with deep pockets. So, based on my research, as we all know, I understood our Indian economy and our Indian story from centuries. It is revolving around our festives, occasions, and weddings. And especially, Indian ethnics has a close connection with these occasions and weddings, especially women-centric Indian ethnic is the story for the growth. That's what I realized. As long as this occasions, festivals, and wedding constitution is there, this particular lady's ethnic will strive, will thrive. So, with that background, in the year 2005, we started our first brand, Kalamandir, in Hyderabad, and we have positioned that particular brand to target middle class. Since the positioning was right and time was very correct, it took off very well, and that gave a great confidence and motivation for us to continue in this line. And from there, there is no looking back. First 6 years we have spent in understanding and learning the business, and from there, after 6 years, we understood we could deliver better unit economics with a focused and specialty brands. That's where we started our second brand, Brand Mandir. We have positioned this particular brand to target the ultra rich and niche women who want to buy one of a kind sari, and simultaneously we want to also address the great opportunity in targeting the occasions and weddings and festival occasions with the brand Kanchipuram Varamahalakshmi Silks. Since a lot of thought and research went in behind it, these two brands were also received very well. And from there, after another 6 years, in the year 2017, we have understood the aspiring sections, which is little below middle class sections, was thriving, and we want to address that opportunity with KLM Fashion Mall, which we did. It's a family mall, and we have positioned it as a 365 days value offering. It's a kind of a hybrid, though we call as a value fashion mall. We majority of what we sell is women centric and ethnic. So, with all these four successful and matured brands in 17 years, we could able to open 54 stores across 4 states of South India, and we have 6 lakh square feet of retail as of now under us, 5,000 plus full-time employees, and hundreds and thousands weavers, master weavers, and vendors working with us across length and breadth of India at around from 100 places. So this is our journey in a very nutshell, sir. So I'll be more than happy to answer any of your questions in this regard.
Well, I was smiling when you actually said the last numbers, 54 stores. When someone says 54 stores in a retail business model, it naturally implies that actually you would have perfected the business model before actually really expanding it. Like 54 is like a very good sort of mature business. But having said that, out of these 54 stores, I'm just doing a follow-up question here. Like, are most of these stores in the mature stage, or there are some recently opened stores which actually are going to become mature? Also, what is the average time for your store in your segment to really achieve maturity? When I say maturity, it implies the sales have sort of achieved an optimum sales per store.
So if I can answer your question, for us,
Please, please.
yeah, so for us, when it comes down to maturity, sir, our formats, when we try to open our stores, we have a little bit of different approach towards a store opening. Generally, the retail trends have always been when the store opens, you see a slow, steady growth, and then
Yes,
it started
yes,
reaching its maturity.
yes.
Unlike in contrast, we do when we try to open up our stores, we do a lot of noise. Like we create in social
Makes sense.
media, newspapers here and there, and we create so much noise that the vicinity knows that the store is opening. That actually works in favor where in the first year itself, in the first month, in the first day itself, we start getting peak traffic within our stores, and our that's the reason why our paybacks work much faster way. But even that is not a steady state of growth. So internally our calculations have always been, we generally leave the year of when it opens. Generally our store opening calendar will be in the end of Q2 and beginning of Q3. That's where your typical weddings and seasons, and I mean wedding calendars and occasion calendars all kicks in. We leave out that year which opened, and the next year will be the base year. And that's when by the complete of next March 31st is when we consider our stores to be mature. Unlike growing like this, we grow very rapidly, then come down, and we have a steady state of growth then therefore.
Makes sense. I understand. So basically, you're saying that if you open a store in second quarter till 31st March, which implies the end of the fourth quarter, that perhaps would be the phase where the store would be doing all things, and then from 1st April it will start achieving the mature stage. Is that something
Correct.
I was understanding right? Yeah. Okay. Sounds good. What's the average sales? I can understand, like the top city might be having higher, the tier 3 city might be having lower, but what's the average sales per store?
Average sale per store is about 25 crores, and average revenue per square feet is 22,500 rupees per square feet. So
Very nice.
more or less, when we try to identify these markets, or when we try more or less, though we call it tier two, tier three, these are really potential players. I can name a lot of places which has such great potential, which competes with our top stores in
Of
cities.
course, because the segment you're covering, the demand is almost same everywhere. It's universal.
Correct.
Exactly, sir. Weddings and celebrations is common across wherever you live, however you go. So you're absolutely on point with it.
So does that imply I'm guessing that our last 12 months sales would have been like north of 1,200 crores? Like what was the last FY23 reported number?
So we closed last year with a revenue of about 1,352, close to 1,352 crores.
Absolutely, 25 crores per stores, yes. And any sort of new stores, like I'm not asking you to forecast, but I'm saying if there is anything which is already in place, any new store openings which are coming up in this financial year for which the company would have already sort of made investments?
We do, sir. I think we have about three stores currently in pipeline, and we plan to open up seven additional stores with the visibility of the funds being here. I think we're at the time where the IPO is happening, so we couldn't disclose too much information about where the stores are. But the plan is that we are going to open about close to seven stores this year, and about 18 stores the next year, and the year after will be our another expansion there. So,
Okay, so
so the growth journey is definitely exciting for us in the markets where we currently are present. We're trying to strengthen our presence in the markets here.
yeah, because I'm extrapolating. If that's the pace, then yeah, the growth journey is going to be exciting. In terms of margins, what has been the average margins for you for the last year? And within that, are the margins almost same like store to store, or there is a difference in the margin profile? Obviously, you have four different brands, the margins would be different, like higher in ultra rich product and lower in the mid income product. But what's the average margins?
Sir, the company reported a margin of about 39.1% at a company level. However, as you rightly mentioned, each and every format has a different margin profile. Though it's not too much of a variation from the smallest to the largest, we reported a margin of about 39.1% in the last year.
Right, sir. And also, coming back to you, Mr. Prasad, one way to growth is B2C, where you're opening stores, everybody's liking your product, your quality, your price positioning, and then it becomes more a relationship. Relationship maybe could be salesperson, could be the brand, but it's more about relationship. Uh, sort of feeling of pride or feeling of bonding. Like you can give names, but it's more about relationships. Uh, but then when we talk about that, is there also a placement in your business where you actually have sort of contracts with event planners or managed planners or anything? Like, is
It's
there an
all,
element?
we have a soft understanding. We don't call it as an agreements or official MOUs. Like, you scratch my back, I scratch yours, kind of a thing. So we have, like, when customer comes on to our store, when they ask for a references, we try to give a good reference. In the same way they do. Like, it's a small ecosystem. We all try to play from different verticals.
So the idea here also is to keep in hand of, like, what's happening in the industry as well. So it's just like, we exchange information to try and analyze the trends that are happening, what's happening in terms of the wedding calendars and things like that. That's a process in perpetuity that we will be associating and talking to a lot of people, trying to get a sense of where the market is going towards.
I'm just imagining, Mr. Bharadwaj. One is that your stores would be having a lot of data. So, is there any effort to put data intelligence also there? Because if the effort is there, then I might ask you how many repeat customers you're having. So,
Maybe because of lack of time, I think, Mr. Prasad, I think he couldn't elaborate more. I think we are very happy to say that we are greatly reliable on the technology front. In all aspects of the company, technology plays a great role within the company. We aspect data in multi-dimensional form that will give us huge amount of insights in terms of our product profiling, in terms of our sourcing, in terms of movement, in terms of our CRM, customer relationship management. And yes, sir, to your point, I think if I have to give you a number, our customer repeat ratio, we have about customer repeat rate of about 50% of our customers are two-time visitors in a given last 15 years data. If I have to, like, look at, and three-time visitors are close to 33%, which we think is very high in this particular space, because having doing a minimal marketing budget and getting this amount of, like, great customer response is one of the attributors for our success, is what I would like to point at this point in time. Yeah.
are you saying three times over 15 years or three times in the same year?
No, in the same year.
Oh, that's fantastic. That's fantastic. Because your business is like this that if people love, then this is something they'll take the family and actually do their shopping. So definitely, that's a good data point here.
Yes.
Also, Mr. Prasad, coming back to you, like India is a big country. Obviously, I think our viewers would also be thinking the business is great. It has already been established. The modus is working well. Revenue is now clocking 1,000 crore plus for any business. Is a huge platform. Is a great platform. But when you change the geography, again the taste changes. So my first question to you will be: is the South still underpenetrated? Are you actually going to expand more and more in South for coming years, or you also have plans to travel to the other parts of India?
See, like, to start with, like, we are a South regional players by choice, because we want to play in the most, like, high per capita and high, spending power region. So that's the reason why we have chosen South as our start of our journey. And South, as we know, it's a country by itself. And if I have to talk about just a sari market size, 50% is from South, and rest 50% is from North, East, West. So, when we talk about South, like, from the beginning, the idea is to follow the cluster model to get better unit economics and economies of scale, meaning we identified potential regions and penetrated deep with multiple stores and formats. So though the number 54 looks little big to you, but the concentration, in Telangana we are only in Hyderabad with around 24, 25 stores, and rest of Telangana is there to explore. The same thing with Andhra. We are only in tier 1, tier 2, tier 3 powerful and cash rich places were there. And same story with our Karnataka. We are only present in Karnataka, Bangalore with mere 9 to 10 stores. Entire Bangalore is a huge opportunity, and the rest of Karnataka is a great opportunity for us to explore. And when it comes to the Tamil Nadu is the most potential and highest sari consumption state. We just have four stores there, and Kerala is yet to explore. So what I'm trying to tell you is there is a lot to explore in South, because this is where we see great
Point
opportunity
taken.
and economies of scale kick in.
Point taken. I've been in Chennai. I've been in Pothys. I've been in a couple of stores. So
Yeah,
uh,
then you can relate what I'm trying to say.
absolutely, and understand what you're saying. So if Tamil Nadu there are only four stores, then I can definitely say that, I think long time you're going to actually cover South first. So definitely
True,
we can
true, true.
understand.
But see, from the beginning, as I told you, one step at a time, we penetrated region by region. For us, walking fast or running fast is not the criteria. Delivering the numbers is always our major attention.
So now let me ask you two questions here. First question will be what's the I understand in terms of a variety and a standing of your own, but if somebody from stock market point of view, if somebody wants to understand what's the product differentiation versus your peers, some of the names which we have taken, but what is the sort of differentiation which your products will be commanding?
So I would even try to tell you, sir, it's not just the product that makes you unique and different than anybody else in the market. Number one, the women always want to have a good choice and a great choice, meaning all latest and innovative designs. Number two,
True.
quality. Number three is price. Number four is service. As we all know, women, if she has to buy one sari, she want to try at least 50 to 60 saris. And for that, you need to be little patient, and you have to give that service. And more importantly, even when customer doesn't buy, when she comes, we make sure she is shown all the latest collection. This way we make sure our own customer becomes our brand ambassadors. As you know, the woman likes something at your store, she go
Sure.
and propagate about you to all her friends and family. So we, in last 17 years we have mastered the art, along with the giving the innovative designs, the service and choice, and more importantly, since we have a great control on the logistics, our prices are always sharp. And we, have to give you an example. Our Varamahalakshmi format, ever since in the inception, more than 11, 12 years, there was not even a single sale at single store we ran end of season or clearance sale. We don't believe in that. We always try to give the best of the best value to our customers, so that the trust and that loyalty is formed in a course of time.
Noted. Mr. Bharadwaj, we move towards the last questions here. Please help us understand what's the amount of funds you're raising, both sort of fresh for the company, OFS, if any.
Yes, sir. So we are planning to raise about 600 crores as primary, and 2.7 crore shares worth of offer for sale. And using this primary for majorly for our growth expansion, we propose to open about 30 stores with the funds that we are trying to propose here, as well as we also wanted to augment our warehousing capacity at Hyderabad, as well as open up a new warehouse in our Tamil Nadu facility. Along with this, we also propose to repay a long-term debt of about 50 crores. To summarize it, I think most of the capital is growing towards our store expansion in Tamil Nadu.
Right. And if I do my own math, I won't ask you to forecast, but if I do my own maths, 30 stores opening implies 25 crores average per store, so 750 crore, maybe perhaps sales could happen. Your average EBITDA margins have been around 9 or 8%. So we possibly actually could be adding 70 crores out of EBITDA. Perhaps this fund usage could move towards that.
So last
Some
year, our EBITDA was about 15.7%.
Oh, okay. So basically, the FY23 EBITDA actually has jumped considerably over the last 2 3 years.
Yes, sir. I think the cluster model has enabled us to kick in the operational efficiencies, and that's what translated to higher EBITDAs in the last
Okay.
years.
Okay, sir. And last question. What is the sir, overall net debt at the end of FY23?
At the end of FY22, we have a long term of about 100 crores and a short term of about close to 240 crores. So it's a total of 340 crores.
Within that, how much was the working capital component?
So it's
On the short
majorly all the short term was entirely about working capital, and the long term was for like furnitures and fixtures. But the and major debt is towards working capital because, as Mr. Prasad sir has told, you need a large variety of options for these women. The options should be so much because you have hundreds and
That,
cities, you have so
that
many
part.
weaves, so many origins, so many designs. With all of that, if you don't equip the customers with enough options, the results are also going to be a little bit delayed there. Yeah, that's the point.
Well, that absolutely sounds good. I think if I sum up everything, this is a business we're talking about, which is well established, 50 plus stores. A lot of stores are going to open up. South still remains sort of undiscovered. We're talking about strong revenue generation. Margins basically are looking strong in double digits. This will also imply, obviously, ROE is actually looking to be improving. But overall, I think looks like a delight for our viewers. Our viewers perhaps will take note of that fact. Gentlemen, thank you for coming on the show and giving us information about this great business. And we actually wish you all the best for your IPO.
Thank you, sir. Thank you so much.
Thanks for your time,
Thank
sir.
you.
Thank you so much.
And dear viewers, I hope you enjoyed this conversation. For now, it's a wrap.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.